ever crack open a book on investing, feel like, man, I need a whole dictionary just to get through this?
Right.
Today, we're diving deep into one that's a classic, but thankfully doesn't require that dictionary. We're talking about Margin of Safety by Seth Klarman.
Oh, yeah?
It's practically a Bible for value investing, and we're here to break down some of that wisdom for you.
It really is considered, like you said, a Bible in the value investing world. And it gets to the core of, what sound investing is all about.
Yeah, and one of the first things that Klarman hits on is something I think a lot of us can relate to, when it
Hmm.
comes to investing, and it's our own emotions. That fear and greed,
Yeah.
it can really lead investors astray.
It can.
And frankly, Wall Street, they know how to play on those emotions.
That's their game.
Yeah.
Take, for instance, the dot-com bubble.
Oh, yeah.
Everybody was chasing the next big thing. Prices were going up and up and up. And there wasn't a whole lot of, I think, deep analysis going into what these businesses actually did.
Yeah. A lot of those valuations, sky high,
Mhm.
but no real track record to support it. So kind of a painful reminder of what happens when speculation takes the driver's seat instead of, that careful analysis.
Right. And that's the distinction Klarman draws between speculation and investing.
Right. Yeah.
Speculation, you're just trying to time the market. You're trying to buy something because you think the price is going to go up tomorrow, next week, next month. But a true investor, they're looking at the business. They want to understand, what is this business worth?
Okay, so that idea of what a business is worth, you hear the term thrown around, intrinsic value.
Yeah.
What does that actually mean? Like, for those of us who, we're not speaking fluent finance here, what are we actually trying to figure out?
Well, it's funny because intrinsic value can seem like this very ethereal, difficult thing to grasp. But when you really get down to it, it's pretty straightforward. You're trying to figure out, what is this business actually worth? Not what the market says it's worth. But if you could look at its assets, you could look at its earnings potential, its management team, like all the things that make a business successful over the long term, that's what feeds into intrinsic value.
So it's like, I'm picturing like going to a flea market or something.
Sure. Right.
And you see a price tag on something. That's not necessarily what it's actually worth.
Right.
You got to look at it, assess it.
You got to know what you're looking for, yeah.
Yeah.
And, you brought up a good point about, people being driven by emotion. And Klarman argues that the market, very often investors are driven by this herd mentality.
Oh, okay.
They're doing what everyone else is doing. They're buying what everyone else is buying.
Yeah.
And they're not necessarily thinking for themselves. And again, you look back at junk bonds in the 80s, this was a big fad.
Yeah, I've heard about this.
And, a lot of people, again, just get caught up in the moment without doing that fundamental analysis, and a lot of people got burned.
So how do we avoid that? How do we avoid getting, swept up in these fads and this herd mentality? How do we tune out the noise and focus on what really matters?
Yeah.
That's where Klarman's central concept comes in, the margin of safety.
Yeah.
Okay, so let's unpack this margin of safety idea. It sounds like a financial seatbelt, something to keep us safe when the market gets bumpy.
It's all about buying a stock at a price significantly lower than its intrinsic value. That difference, that discount, is your margin of safety.
So say a company's intrinsic value seems to be $100 per share, but it's trading for $60. That $40 gap is our margin of safety.
Exactly. It's like a buffer against uncertainty. Because let's face it, even the savviest investors make mistakes. Maybe we misjudge some aspect of the business or unforeseen circumstances arise. That margin of safety helps cushion the blow.
Klarman uses the analogy of buying a bridge, right? You wouldn't just trust that it can handle the weight limit. You'd want it engineered to withstand far more.
That's a great way to put it. It's about building in a margin of error. And remember, intrinsic value isn't always a precise figure. It's an estimate. And a margin of safety helps account for the inherent uncertainties in those estimates.
This makes me think about those too good to be true deals. If something seems incredibly undervalued, is there a chance our margin of safety is actually a red flag?
That's where the real work of a value investor comes in. You have to dig deep, understand the underlying reasons for that discount. Klarman stresses that a margin of safety shouldn't be used to justify buying into mediocre businesses just because they're cheap.
So it's not just about finding a bargain. It's about finding a bargain with strong long-term potential that the market is mispricing for some reason.
Exactly. It's about being both skeptical and opportunistic. And that brings us to another crucial aspect: patience.
Right, because if we're buying for the long haul, we can't get spooked by every little dip in the market.
Precisely. Value investing is about tuning out the noise, resisting the urge to follow the herd, and having the conviction to hold onto your investments even when others are panicking.
It sounds like to find that margin of safety, we might have to be a little contrarian, not follow the crowd, maybe even do the opposite sometimes.
Yeah, you have to be willing to look where others aren't. And Klarman talks about that. He encourages investors to explore those areas that are often overlooked by, the big institutions. Things like spin-offs, distressed companies, even, bankruptcy investing.
Bankruptcy investing, that sounds a little intense. That's not for the faint of heart, right?
It can be complex,
Mm.
definitely. But it's a great illustration of Klarman's point that sometimes the best bargains, the best opportunities are found in those places where other people are afraid to look.
So everyone else is like, chasing the hottest new IPO, and we're over here calmly analyzing the balance sheet of a company that, Wall Street's already written off.
That's the value investing mindset, right? And it brings us to, another point that Klarman challenges, which is the rise of passive investing,
Yeah.
specifically index funds.
Right. Because the thinking with index funds is like you're trying to match the market, not necessarily beat it.
Exactly. And Klarman's argument is that while that can be a reasonable approach for some investors, it can also lead to, again, that herd mentality where you're pushing up the prices of assets that maybe don't deserve to be at that price.
So even though it's like, hands off, you're supposed to not think about it, not do anything, it can actually like unintentionally cause some of those bubbles if everyone's just piling in without really, doing their homework.
Yeah, you become indifferent to what you own, and that can be dangerous. Klarman's philosophy is all about being an active, engaged investor, understanding the businesses that you own, thinking for yourself, and having that courage to be different.
So for our listeners out there, even if, after this deep dive, they don't all run out and become, diehard value investors, what's like a key takeaway they can, take from margin of safety and apply to maybe other areas of their lives?
I think the biggest one is just the importance of critical thinking. Don't just
Yeah.
blindly follow the crowd. Don't get caught up in the hype. Really do your research. Understand what you're buying, whether that's a stock or, anything else, and don't be afraid to chart your own course.
It's about looking a little deeper, asking those tough questions, maybe, not just going with your gut, but actually thinking it through.
Absolutely. And, that principle of seeking that margin of safety, it applies to so many things, right? It's about thinking long term, understanding the risks involved, and really protecting yourself from that downside.
Klarman's margin of safety, it's more than just an investing book. It's like a roadmap for how we navigate a world that's just like flooded with information and uncertainty. And it really kind of encourages us to think for ourselves, to challenge assumptions, and to really approach things with, a healthy dose of skepticism, but also with that long-term perspective.
It's one of those books that really stays with you and makes you look at things a little bit differently.
It does. And if there's one thing we want you to take away from this deep dive, it's that understanding these principles of margin of safety, it can empower you to be, more informed, to be more discerning, and ultimately to be more successful in, your decisions, your investments, and honestly, just in life. So that's it for today. We'll catch you on the next deep dive.